Thanks again for allowing us to be a part of your day here on a very active Monday as we kick off this new trading week. And, well, later today, I believe, we finally start spring, even though you wouldn't know it by looking at the temperature gauge. The thermometer out there is really dipping low here this past weekend. And I want to take a first look at what's going on in our markets. Let's go to the corn board and take a look at our quotes provided by Bar Chart. Here they are. We have the May corn down 5.5 at 628 3/4, and we have that December contract down 4.5 at 556 3/4. So we're still under pressure. When we opened up on the daytime session here about 45 minutes ago, we were down about 6.5 cents on the May corn. So maybe we're bouncing just a tiny little bit, but pretty solid losses all across the board. Soybeans have been chopping all over the place. And I checked just a little bit ago, and they were down in double digits. Now you have May soybeans only down 2.5 cents at 14.74. So it bounced 12 cents already off of its earlier low. We have the November new crop soybeans down 5 3/4, make it down 6 now at 13.07.5. So we're about in the middle of the trading range. We're about 11 cents off of our earlier low made last night and this morning. But we're still about 8 cents away from our high as well. All kinds of choppiness going on in the wheat trade too, but mainly a lower trend here today. In Chicago, May down 12.5, and now we're under $7 at 6.98. And you have July down 11.5 cents in Chicago. In Kansas City, hard red wheat, you have the May contract 11 3/4 lower at 8.24 per bushel. Wow, that's about a dime off of our overnight high. We are about 4 cents off our earlier low this morning. And July KC wheat down 10.5 cents right now. Over on spring wheat in Minneapolis, May down 9 3/4 at 8.51. That's basically about 9 cents off of its overnight high. We're about 2 or 3 cents from our low. And in cotton this morning, what's going on there? We have July down 17 points at 78.27. And we have December, the new crop month, 37 lower at 79.14. So if you're watching at home, you'll see on the cotton board, all the contracts are now under 80 cents, all of them. So that could be significant too. Well, we're joined in the studio by Mr. Chris Swift of Swift Trading right here in the Nashville area. Always good to have you in.
Thanks, sir.
Hope you brought a coat.
Yes, sir. It is kind of chilly out there this morning.
A little nippy out here in the Mid-South. All right, your impression of what's going on in the grain market. So weaker tone this morning. Why, from your perspective anyway?
Well, I think it's springtime. We're all looking forward to planting. We got 2 weeks now from the March 31st planting intentions, and I know a lot of people will be anxiously awaiting to see which acres, to see which product will get the most acres out there. But I think both of them are going to get a really good share of the acres that are available out there right now.
Okay, I want to ask you something. We had kind of a medium range weather outlook that came out over the weekend. Mm-hmm. And now they're talking like prospects for maybe abundant moisture in the southern part of the U.S., mm-hmm. maybe the southern plains or southern Midwest, into the end of March. Well, if that would be the case, would that maybe mean that we may have to forfeit a few acres of corn and switch to beans, or what's your thinking on that? I
think it's a little bit too early to tell that, but right now with the wheat to where it is, and maybe we have avoided this last freeze that we had with it. We see wheat prices a little bit lower this morning after the freeze that we saw Friday was higher in anticipation of, so that's probably over with. But no, I'm not real sure. I think what you'll see is probably close to an equal number of acres of both right now. And then as we move outside of the corn planting time frame, then whatever additional is left over do go to beans.
What about the new crop month? Like on soybeans, November, they're under $13,
yeah,
right?
They're slipping now. And whenever they go to a new handle, we're always very paying attention to that, because now that we're trading, the 12s, and we could get into the lower 12s, and we notice corn's no longer, it's just right above 6 on the front end and about 5.5 on the back end of it. Same way with the beans. The beans are all now down under 15. So now we're trading 14 old crop beans and right at 13, 12.90 in the new crop beans.
Okay, well, we'll take a quick little break. We'll come back and have more with Chris Swift, and we'll talk livestock right after this. Well, we're talking with Chris Swift in studio live this morning. He's with Swift Trading. Now let's go ahead and take a look at our livestock trade and on live cattle here this morning. On our quote board provided by Bar Chart, you know, we opened up just a few pennies higher here, Chris. Live cattle right now have turned steady to weaker. Now the April is up a nickel, but the June contract down a dime at 156.30. August is unchanged, so it doesn't know what it wants to do this morning. We have the feeder cattle market still higher. We have the nearby showing the most strength. April now up 67 at 195.32. And you have the May contract still above $200. We're at $200.20. That's up 25 as we speak here. On the lean hog market, you have the April, wow, down $1.50 again. You have May down $1.30 at 85.47. At first, I'm going to ask you on lean hogs. Okay. What is going on with the lean hogs anyway? Why does no one want?
I was scared to death you were going to ask that question. I don't know.
Brutal.
3 days in a row of, I think, nearly $12 in those 3 days.
Yeah.
And, not seeming like a buy order anywhere in there. So I honestly, I don't know, but it sure did a lot to converge the basis in just 3 days.
And I mean, we're making new lows every day, right?
We did for the last 3, yes.
Okay, what about the cattle? They're not doing much. But
no, they're not. The cattle on feed report came out with 11.6 million head on feed, and that's literally the exact number. This would be 9 months in a row of that same number of cattle on feed. So that's the decline from the herd size that we've seen, and we're running somewhere between 94 and 96% placed as of last year. But we've also curtailed our slaughter capacity just a little bit. We've raised the price of boxes and kept the retail price very elevated to the consumer, and things are just kind of trading status quo right now more than really rising or falling to any extent.
So for the average layman or consumer out there, you know, if they're wondering what's going on in the cattle industry, the only way you're going to get the herd bigger is to hold some cattle back from going to market to keep them back for breeding. But if you do that, there's fewer going through the processing channel.
Makes everything higher at the
and there may be more pain at the retail counter before you get to that point. Is that right?
That's exactly right. And we're not really sure how long that's going to take. We're probably not going to do anything this year. So this year we'll probably see the less likelihood of expansion. We still don't have our pastures healed up yet. We're not real sure what kind of hay production we're going to have. And even if we started today, you're 2 to 2.5 years before seeing that product available to the market.
Everything is long term. I mean,
in cattle production, it truly is, yes.
Wow. Well, thanks for explaining that. I appreciate that. But I think a lot of consumers are just not aware of the long-term implications there, so it's going to be a while. All right. Well, thank you, Chris, for coming in.
Always a pleasure.
Talk to you again. Chris Swift of Swift Trading.